new tax bands, allowances, that kind of thing for April 2023. Let's take a look at how they affect our take-home pay and also whether we can use the new allowances to benefit more from salary sacrificing an electric vehicle. Stay tuned. Welcome back to the channel, folks. JD here again with I think the first video of 2023. I haven't made any content for a long time because I pretty much thought I'd covered everything there is to know about PCP and HP and salary sacrifice schemes. People are still emailing me, so that's great. Do continue to email me here. I've just updated the Car Finance Simplified app, which you can get a copy from me if that makes sense. $14.99 or $7.99 if you've already purchased one of my spreadsheets in the past. Send me an email here for details as to how you can get your hands on a copy. We've also got the spreadsheet versions as well, so if you're new to the channel, for a one-off donation of £10 you can get your hands on my PCP and HP calculator, which covers all sorts of things, calculating your own agreements, voluntary termination, early termination, that kind of thing. And then I've also got what I'm going to be using today, the electric vehicle salary sacrifice spreadsheet. Again, you can get a copy of that for £10. But if you want both of them with unlimited updates, which I can make on the fly and it'll push the updates to your app, you can get the app for $14.99. So if you're interested in any of those, please do drop me an email, as I say here. What I want to do today is just take a look at the new allowances for 2023. Now, not a lot has changed in 2023. 2022, we saw the national insurance rate go up between April and then it came down again in July. Personal allowances have been frozen until 2028, I think it is. And that's where this term stealth tax comes in, because the more people are earning, the more tax they're paying, because the personal allowance, which normally kind of rises in line with inflation and a bit more sometimes, has been frozen at 12,570 for the next 5 years. So there's not a lot to talk about in terms of changes. However, the biggie is if, unlike me, you are a very high earner and you earn more than £150,000 or now £125,000, the higher rate tax band has changed. It used to be that if you earned more than 150,000, you paid tax at 45p in the pound, 45%. It's now come down to 125,000. So you're basically paying 5p more tax in the pound on £25,000, if you see what I mean, because it used to be anything over 150k, now it's over 125k. What I would have thought I'd do then is just take a couple of examples. Let's pretend we earn, I don't know, 150k. Let's see what the difference is going to be on our take-home pay. But let's also assume that we're going to, instead of taking a salary of 150k, let's take a salary of 125k or thereabouts and salary sacrifice 25k to lease a car. Now you'd get an amazing car for £2,000 a month, but this is kind of an extreme example just to demonstrate the savings that might be possible. The other thing I may talk about, and I think I've done a video on this before, is if you're earning over 100k, for every £2 over that 100k, your personal allowance comes down by £1. Up until 125k effectively. So if you earn 125k, you've got no personal allowance, because every £2 over £100,000, your personal allowance drops by £1, and my spreadsheet will do that for you as well. So let's take an example. Let's first of all, let's say we've got a standard tax code of 1257L. Hopefully you can see this. We'll ignore pension, we'll ignore anything like that, and let's say our gross salary is 150k. Now you'll see, hopefully, if you look carefully, let me just zoom in on this. If we zoom in a little bit here, you can see that my spreadsheet has an adjusted tax code. And what that's done, look, only if your salary is greater than 100k, it's dropped my tax code to 0. Because as I said, if we're earning more than £100,000, our personal allowance starts to come down. 150k, we're not going to have any personal allowance at all. So this is, actually, let's nip over to current rates. So this is the tab until April 2023. So let's do that again, 1257L. 150k. So that gives us a net pay, excluding anything to do with pensions, that kind of thing, of £7,585, thereabouts. With the new 45p in the pound band, with the 120, with it being 125k now, not 150k, if we do the same thing, 150k, our salary now becomes 7481. So 7481 versus 7585. So we're £104 a month worse off if we earn 150k. Okay, it's not a huge amount of money, but it's still £100 a month. So we've worked out that we're obviously going to be worse off. So what would happen if we were to salary sacrifice a car? So let's say in the current scheme of things, so that's until April 2023, let's say we salary sacrificed a car of, let's see, I don't know, let's say it's £1,000 a month, so £12,000 a year. And we'll put our benefit in kind in. So if you're new to the channel, if you don't understand this, the nice thing about a salary sacrifice car scheme with an electric vehicle is that certainly until 2025, the benefit in kind is currently frozen at 2%. If you were to salary sacrifice or have a company car, such as, I don't know, a BMW 5 Series diesel, you'd probably be paying something around 30% plus benefit in kind. What does benefit in kind mean? It basically means the amount that comes off your tax code. So if you've got a £50,000 car, and let's say, for the sake of argument, a 10% benefit in kind charge, that would be £5,000 a year. So that's the taxable benefit. So £5,000 would come off your tax code. Obviously, in this case, we haven't got a tax code, so it's even worse. But if we were, if we earned a normal salary, let's say of £50,000 a year, we would end up having a personal allowance in that case of 7,520 instead of 12,520 because £5,000 has come off. The nice thing about electric vehicles, as I said, it's only 2%. So let's say you were going to have a Tesla, let's say it's 50k for the sake of argument. So 2% of 50k is £1,000. So £1,000 would come off your tax code. If you were a 20% taxpayer, that means you would only pay £200 a year in company car tax, 20% of the taxable benefit that's come off your tax code. However, in this case, obviously, we've got a negative tax code now because we had no tax code to start with because we're earning a lot of money. So we've put that in. So that means, look, that car would cost us £613 a month, or roughly 38% saving. That's including the company car tax. And that would give us a take-home pay of 6,971. Let's see what difference it makes, if any, I'm not sure, if we were to do exactly the same thing from April 2023 with the new 45% band. So let's say we're going to salary sacrifice, again, £1,000 a month, £12,000 a year. Benefit in kind, £50,000, P11D value, 2%. So that means, look, now that's interesting. In this case, the car is only costing us £530 a month, or 47% saving versus what it would have cost us in March 2023, or any time before April 2023, I should say. So already you see there's a difference. Because we're paying more tax from April, if we can take some of that money and lease a car with it, we're going to save more money. So we've got a net pay of 6,971 versus 6,951. So effectively our net pay is unchanged, but because our tax has gone up, we've saved more tax and we've been able to take that extra £100 or whatever it was and put it into the car. So the car is now costing us $530 versus $613 before April. Let's take another example. Let's say we earn £125,000 a year, and we'll do that from April only. Because what I want to demonstrate is the amount you can save a lot more if you're in that kind of sweet spot of between 100 and 125,000 pounds a year when your personal allowance starts to reduce. So let's say we earn 125,000 pounds a year. Right. Excuse me. So 125,000 pounds a year gives us a very, very tiny tax code of 70L effectively, or 7L. So in this case, our take-home pay would be 6,379. If we were to salary sacrifice, I'll tell you what, let me show you a really good example. Not that you probably would salary sacrifice a car for this amount, but let's say we were to salary sacrifice £25,000 a year. The reason I've said that is that means our new gross pay, effective gross pay for tax purposes, becomes £100,000, which means our personal allowance goes right back up again. Now you see the spreadsheet has given me a personal allowance of 1157L. That's because it's taken off this £1,000 benefit in kind. So if we didn't include benefit in kind at all on the spreadsheet, if we got rid of that, look, you see we've got our tax code right back up to 1257L, because we're earning £125,000 a year gross, which means we get rid of our personal allowance altogether. But then we go, actually, rather than giving that to the tax people, I'm going to use that to salary sacrifice to lease a car with. So that means our new salary becomes 100k. Let's put the benefit in kind in. So we've got a personal allowance of 1157L. Look at this. We've saved 60%. Because we're in that sweet spot and we've recovered our personal allowance for our salary and taken the amount outside of the personal allowance, if you like, and used that to lease a car. So that car that we are paying £2,083 a month for, in this particular set of circumstances, is only costing us £825 a month, or 60.4% saving. That is because we've taken all of that 25 grand above the 100k, which means for tax purposes our gross salary is now 100k, which means we get all of our personal allowance back again, and then we've taken that 25 grand and we've put it into a car. Let's be more sensible. Let's say we are going to lease a car for £1,000 a month, so £12,000 a year. That means we've lost some of our personal allowance because our new effective salary for tax purposes is now £113,000. So we're £13,000 over the threshold, which means we've lost about £6,500 of our personal allowance. Remember, for every £2 over 100k, we lose our personal allowance. Our personal allowance reduces by £1. So our personal allowance is still 507L. That car would cost us £413 a month instead of £1,000 a month. Gives us a saving of 58%. So for those of you who are earning over the 100k and you're losing your personal allowance, I think it's a really good time, certainly until 2025, because we don't know what's happening with benefit in kind. Really, really good time to lease a electric vehicle. And I've forgotten where my button is. There we are. So I hope that was useful. Thanks for watching. As I say, if you're new to the channel, please subscribe. Please email me here if you'd like a copy of the spreadsheet you've just seen, or if you'd like a copy of the app. The app, I should say, runs in a container called Open As App. So all you have to do is download the Open As App container for iOS or Android, and then I send you a link to my app and you can run it in there. And the nice thing is, anytime I make a change, it pushes the update to your phone. That's $14.99 one-off payment, or £10 per spreadsheet. Thanks for watching. Maybe I'll see you again when I can think of something else to talk about. Take care.